Hey guys, Steve here from the turtlefollower.com with the strategy session for Wednesday, October 1st, 2014. Not too much can be said to the positive side tonight. A lot of selling. I didn't actually think that was going to happen today. I kind of had the feeling in the morning that it potentially may reverse. The ticks were improving, and again, if you're unsure of how to read the ticks, I did do a video that you can find in the trade school section going over how to read the ticks, but the ticks were improving. We had a couple pushes to positive 1,000, and then sure enough, once we got that was downhill, all downhill from there. But as far as the S&P goes, you can see that I'm looking at two potential trend lines here, one being more of the primary trend line. Okay, so that one connects the lows from February and August, and then the other one is connecting the lows from April and August. So let's see which one actually plays out. I do think that this is potentially some significant resistance. Obviously, if we broke this level, then the next level I would look at for some support would be down here in the 1900 level. Kind of crazy to think that we could pull back from 2000 to 1900, but sometimes it does happen, and you can see the last few times it has happened, it set up some nice long-term trends higher. So we'll see what happens with that. But the one thing that is concerning right now is if you look at the weekly chart. I'll actually make this bigger here. Okay, so if you look at the weekly chart, we are closing below this 20-week moving average, which is about equivalent to the 100-day moving average. It's only happened once, twice, and now again we are right now closed below the that trend line. So that's one thing that is concerning, but the other thing to look at is we still have 2 trading days left. So potentially we could reverse and move back above that level. To do so, we'd have to be trading above, say, 1965. But again, on the weekly, we are breaking the trend line as well. So just a couple different things to look at there. On the NQs, we finally broke that 50-day moving average today, came right into support of the previous high back from the middle of July. And on the YM, the Dow futures breaking the 50-day, and you can see here the trend line down here around 16,500 would be the next possible support level. So this morning we exited our trade in FIS at the open. I'll update the model portfolio shortly to reflect that. So we exited right around let's see, open was 56.11. So sure enough, we got a good fill on that, not knowing that the day was going to continue lower. The other trade that we are going to be exiting tonight is RSG. All right, so this is what happens when we have some significant downtrends in the market and some selling. Is it's able to establish where and which stocks are the weakest. RSG, we were hoping it held in this 38.50 to 39.58 range. Sure enough, it did not. It broke down below that, below the trend line, below the 50-day moving average, and sure enough closed below the previous highs from this consolidation. So with that said, we will be exiting RSG. The one thing you can look at if you're a little bit longer term is it is right at the 100-day moving average, and also minimally below the weekly high back from the end of June. But for us, especially with the market conditions, I am happy to take an exit on the trade. Pretty much going to be a wash, I think. I think we entered right here on this breakout. So, we're looking at maybe a $1 loss in the trade. So that's it for exiting positions. So again, we exited FIS this morning. We will be exiting RSG tomorrow morning. Let's go through the rest of the positions. Apple is right in the middle of the range. It's holding that 50-day moving average, so $98 is the stop there. I'm not going to make this too long here. ADM is still trying to hold that higher small consolidation it's been having, but we are well above the 50-day moving average and our stop level at 49. Disney tested its stop level today right here at 87.20, closed above, slightly above it, so Right now Disney's not looking so well, but you could see here we are on the weekly chart coming into some good support and the 100-day moving average. So if it was going to bounce, this would be the area that it would need to bounce from. Right now stop is a break under, or a break and a close under 87.20. Expedia down 3.24%. So basically everything that I discussed last night actually this morning in the stock trade video, you can kind of throw out the window. But that's the whole idea of stock trading. It changes daily, and things change in an instant. But right now we're using this 85 or 82.50 level as our stop. Came right back into the 50-day. I was hoping to get a breakout over 88.35. When we looked at GD down 2.2%. All right, stop here was moved up to 122.50, which is the closing low from this little 829 and 92. So right in there. So that's what we're using as our stop level. But you could see it's coming back in, potentially a lower high. Not a good sign. So like I said, on that one, break below 122.50 would be a confirming exit in that trade. LUV down 3.61%. So we're coming right back into that 50-day. What I'm looking at here is how this 31.78 and the 50-day are kind of meeting almost at the same time, at the same point. Again, we are in a steep downtrend with this. So I would expect it to test this 50-day moving average sooner than later. If not, the next thing I would be looking at to move stop higher would be a breakout over this downtrend line. Potentially then we can move stop to 31.78, and then eventually if and when we get our close over 35, then we can potentially use this low here as our new stop level. So as far as our positions go, not good. I mean, we had almost every one of our positions down more than 1%, and several down over 3%. So not a good day for us, nonetheless. Not a good day for most people unless you were extremely short, which the only reason you would be short, I think, at this point would be playing a counter trend move, because we are firmly in a uptrend, or were in an uptrend, I should say. So we got the breakdown, or are getting the breakdown today, depending on which trend line you're looking at. But if you're looking at the weekly, we are somewhat and still in an uptrend until we get a weekly close. We haven't gotten that weekly close yet. As far as our watch list, again, all red. There are two that are looking good to me. Tyco, I like. All right, Tyco is still kind of navigating this trend line. The further it moves into this point, the worse it's going to be. I would like to see a nice breakout from this downtrend line, because I think what happens if we go and test this uptrend line next, I think that's the one that breaks. PepsiCo still holding up nicely above the 20-day. Estee Lauder still moving sideways. So, there's still some stocks that are holding up well, and I think that's one thing that you have to pay attention to. And one thing I tried to explain this morning is, yes, it seems like the sky is falling, this and that, but you have to look at the positions and see where they are relative to the moving averages. The fact that we had a couple stocks, I forget which ones, I think maybe was it Expedia? No. GD, that was what, GD. Yeah, GD. So, yes, the sky is falling, absolutely down 2.2%, it's never good, but look at what we're doing. We're not even testing the 50-day moving average when the S&P is breaking down below the 50-day moving average. So what that tells me is that that's a stronger stock than the market itself, and those are ones that I want to be in. Now that could all change again in a couple days, or tomorrow, but for right now, I'm happy with the portfolio. We're going to be down to we're going to take FIS out, and we're going to take RSG out, so we're going to be down to 6 positions, which is the lowest we've had since we started. So it's always good to kind of go through these pullbacks, make sure your system and you're following through. The biggest advice I can give you right now is continue to look for those trades to the upside. I don't see a reason not to, unless we definitely get some more selling pressure. Then I would say maybe it's time to hold off, or maybe at least start looking for some shorts. But I would say at this point you still should be looking for long plays, and especially ones that are holding up well when the market is pulling back, because those are ones that want to be on our watch list for next week. And the other thing I can say is manage your stops. If your stop is hit, don't think you're smarter. Don't have an ego. Take an exit. It's not a big deal. I'm taking 3 exits in my positions. I'll show you what those are. I have Dow that I'm exiting tomorrow. All right, Dow got smacked around today. I was using this 51 level as my stop. Sure enough, it didn't happen. Now, yes, I could say, oh, well, it held the $50 level here, and it's done that the last 2 times. Yeah, but it hasn't closed there. And look at what happened when it held those areas on the weekly chart. It held those areas in here. It was still above the 50-day moving average. Now it's below it. For me, time to get out. I'll set an alert if it breaks out over 55 again. I'll be glad to get back in, but for right now, managing risk and taking trades off. RSG is another one that I'm getting stopped out of, and there was another one, RSG and Snap-on. Snap-on, I'm taking an exit. All right, I've been in Snap-on for a good amount of time. I think somewhere back in here. So unfortunately, it does suck when you have this nice trend higher. You're all the way up at 126. You're looking at like a 10 or 15% gain, only to have it taken out in about 2 weeks, right back down to basically your entry. So I think I'm looking at this trade with like a 1% gain. But look again, what's happening. Yes, again, we are potentially holding this 118 level. But again, the last time it held 118, it was above the 50-day moving average. Now it's below the 50-day moving average, and I'm taking an exit. All right, so that's what's happening here. If we get the trade and it moves back over 126, I'll be happy to get back in using 118 as the stop. It sucks when you get stopped out at the bottom, but it's a necessary. You have to take the exit when you take the exit. I think in this trade I was using 119 as the stop level. So it is a fairly minimal break, but it's a break nonetheless. And with everything going on, I have a lot of positions. I'm using some margin. I want to take that off and move on. So, when in these downtrends, it's definitely good to just make sure you follow your plan, take your exits when they come, not get too big of a head about it, and just do what you're supposed to do. It'll definitely help you in the long run, because if you keep your portfolio near the highs, when the market turns around and it's in your favor, and everything is optimal for trading your system and being long stock, then you're going to recoup what your highs were and then some. So with that said, have a great rest of the night, guys. Hit that like button below if you liked the video. Please be sure to subscribe, StockTwits, Twitter, Google+, and the YouTube channel, and also to the nightly recap. We'll see you tomorrow for another strategy session. Make sure you take those exits, guys. Have a great night.